So here we have an article from CoinSpeaker titled US ends QT quantitative tightening with 13.5 billion liquidity pump, crypto market rally ahead question mark. So we're going to read into this a little bit and do some speculation. This is mainly bullish news for crypto, like we'll see in a moment, with crypto up 6% just on the day. And so yeah, the U.S. Federal Reserve ended quantitative tightening on December 1st, 2025, and injected $13.5 billion into the banking system via overnight repos, raising hopes for crypto market upside. So this apparently was supposedly on the more quiet side, but people picked up on this. And so a few of the key notes they brought into this article is this is the U.S. Fed's second largest liquidity operation since COVID-19. So I saw a chart earlier. Yeah, here it is. And this chart from Fred is, the second highest since COVID. So they pumped a bunch of money into the banking system. And this is, bullish news for crypto. So what we can see is Bitcoin, and this is just a one-day chart, up 6.5%. Okay, I know on this channel I've been mostly covering, silver, gold, and some other kind of financial speculation, but silver and gold is actually about 1% down on the day, although obviously it is at just broke past an all-time high, busting past the 1980 high very recently. And so what people are saying is this is essentially like a warning sign of the plumbing and things like that under the surface in the banking system kind of having issues. Okay, so Tom Lee expects improved liquidity to benefit risk assets, projecting a potential Bitcoin rally to all-time highs by January 2026. So with free, cheap kind of money, lower rates like they're expected to cut, the Fed is expected to cut in December, and we'll look at the odds in a moment. But liquidity pump plus lower rates plus Trump talking about $2,000 stimulus checks coming, even floating the idea of no income tax in the near future, whatever that means. These are all kind of like rally signals for riskier assets. So what we usually see with crypto, with Bitcoin, is when money is cheap, when liquidity gets injected into the market, that goes into speculative assets, Bitcoin and crypto being the most speculative, right? So it bounced off this support level of around 83,000 down here, and in just the last day it has shot up pretty substantially. So market uncertainty remains as BOJ, Bank of Japan, rate hike odds for December rise to 81%. And so for the rate cut decision in December, so making it cheaper to borrow money, we see that on Poly Market, which is where I like to look to see kind of like where people put their money is, put your money where your mouth is. And it seems like just since yesterday, odds have increased. So a 25 basis point decrease, rate cut from yesterday was 89%, and now it's shot up to, it can't get much higher than 92%, right? So people are very much expecting rate cuts, and that tends to boost speculative assets, okay? So by officially putting an end to the quantitative tightening on December 1st, the U.S. Federal Reserve has initiated the first steps for liquidity expansion. market experts see this as a stepping stone for the next major crypto rally. So I have more of my portfolio in silver, S&P, tech stocks, and then some crypto. I like to have money in kind of everything to have a vested interest in it. But this seems like, yeah, good news, especially for the crypto markets, if that's something you are watching. And someone on Twitter pointed out on X, this is just an overnight loan. It's not a permanent liquidity injection, and it's more of a sign of stress. Okay, so but the headlines still read, that's a fairly substantial liquidity injection. You can see Fed Chair Jerome Powell kind of cranking up the printers like expected for the near term future. So that'll just mean more money going into speculative assets, potentially a weaker dollar, meaning I see a case for silver and gold to continue to rise, with the banks under stress, with these signals, hard assets showing a decrease in trust in the system, a decrease in trust in the US dollar. So really my take is really along the lines of the debasement trade. Literally putting your money into any investment is better than sitting in cash. Although obviously things go up and down, crypto goes up and down like crazy, and you just need to kind of have an iron stomach to wait out some of the volatility here. So second largest single day liquidity operation since COVID-19. That was insane, with a crazy amount of money printed 2020 through 2022. I don't know the exact number. You can put it in the comments, but I heard almost 40% of the US dollars in circulation were printed in the last 5 years. Obviously, everyone feels that with inflation, with asset price manipulation, with housing skyrocketing. Okay, so reading a little further, the operation signals heightened short-term funding demand within the banking sector. This could ultimately bode well for risk-on assets for U.S. equities and even the crypto market. And this is pretty much confirmed just with the price of Bitcoin today. And everyone knows that all other cryptocurrencies follow Bitcoin, Ethereum, and so on, right? So the Federal Reserve has officially halted quantitative tightening, its quantitative tightening program, as of December 1st, 2025, marking a notable shift in U.S. monetary policy. The decision comes after the central bank withdrew approximately $4.2 trillion from the financial system since the tightening cycle began in June 2022. However, just ahead of the Fed officially ending QT, the crypto market faced a major pullback. So, so there's been kind of like some back and forth between for investors, where do you put your money to combat inflation? Silver, if we look year to date, is now up 96%. I believe if we look at gold futures, it's up over 60%. Almost 60% here, 58.39%. And this has obviously massively outperformed Bitcoin and crypto, actually being just barely break even, kind of pumping a little bit, dumping a little bit, just a seesaw of volatility. So central banks are buying up gold and silver. And there's a lot of uncertainty just with how the US dollar is doing, whether the US dollar is going to maintain its reserve currency status, how long that's going to be, what the next reserve currency might be, which way things are going. Are we looking at deflation or inflation? And this seems to be pointing towards inflation with injections, liquidity injections, with rate cuts, with stimulus check discussions, and all kinds of craziness. Okay, yeah, the Fed Reserve's decision to halt quantitative tightening would be a turning point for the crypto market. Fed Strength's Tom Lee noted that the last time the Fed ended QT, markets rallied roughly 17% within 3 weeks. And so things are already at all-time highs. Some of that is due to inflation kind of being a false kind of flag with, oh, my portfolio is up, but then you look and you go to buy groceries and whatnot, and so are all the prices just to live. So, but this seems to be a very good sign for investors, and the move, anything but cash is where most people are putting their money to preserve their buying power. So, moreover, Lee believes that this shift is particularly relevant for Bitcoin. So yeah, we see that in just the last day. Bitcoin spiking pretty substantially in the last, really since this afternoon. Okay. So with rate cut decisions very likely to cut 0.25% this month, with all of these signs, everything's pointing towards, unfortunately, more inflation. Fortunately for investors, higher asset prices. And so I am still heavy, actually more into silver miners, silver ETFs, physical silver stacking. I've been buying some silver rounds, some silver troy ounce coins, and just trying to be more educated and more mindful about where everything is going, because these are very scary times with just cost of living being so insane, especially for me, technically a young millennial. And so, yeah, keep your ear to the ground. Hope this video helped, and I'll see you in the next one.